My name is Cameron Tope. Every week I bring you tools, tactics, strategies, lessons I've learned, things that have helped me build up a sizable rental portfolio in about 2 years and now manage that portfolio. Today I'm with somebody who doesn't need any introduction, Mr. Grant Cardone. Uncle G, how are you?
Hey, great to be with you, man. Proud of everything that you've done on your end. Well done.
Hey, trying to catch up to you, man. Similar to humble beginnings in Lake Charles, Louisiana. I'm from rural Southern Ohio, Uncle G. So trying to catch up to you. Portfolio of 2.6 billion. You hit the Billy number finally.
We're almost at $4 billion worth of real estate. I don't know who gave you that outdated information, but we'll do $750 million worth of transactions before the end of the year. So I think we're sitting on 3.1, 3.2 right now. It doesn't hurt us that we've been buying the investment class that everybody wants since COVID happened.
Oh yeah.
And well, I've been telling people for years, I'm like, this was before COVID. So you guys got to be careful, all this hotel and this retail. Nobody really needs all this.
Yeah. So tell us a little bit about that. With the AAA, you're in the AAA top of the line stuff, right, Uncle G?
Well, this deal I'm buying right now is AAA amenities, AAA location. It's built by one of the top groups in the country. Typically it's held for institutional quality. Mm-hmm. The Blackstones, the AIGs, the New York Lifes. These are the big sovereign funds. These are multi-$100 billion companies. These aren't rich people. These assets right here, rich people don't get to invest in. So not only is the little guy, the non-accredited, the middle class, upper middle class, and the rich, even the wealthy don't get a shot at these deals. Typically who buys these are institutions that names are their acronyms, AIG, New York Life, NYL, these are multi-$100 billion companies that typically own these assets for 10, 15, and 20 years. That's the kind of stuff I'm buying and allowing our investors, everyday people, to invest alongside me.
Well, that's the thing, Uncle G. I remember it was about, I want to say a few years ago, you were trying to hit the billion mark, and it's like you're 4 times out. Are you going 10x the billion, trying to get to 10 billion now?
40 billion. We're going to 40 billion, bro.
I love it. Well, tell me, so, I read your book, 10X Rule, Sell or Be Sold, many, many years ago. And that allowed me, thinking from the 3 to 5 unit properties, to try to go to the 30, 40, 50 unit. And we're trying to take this company to a triple digit, unit under management company. I just have to ask you, Uncle G, how in the world do you stay motivated every day? How do you keep pushing? I mean, you hit the billion mark, you cross that, you surpass it. Now you're saying you're going to 40 billion. The biggest thing I want to know is just, how do you keep pushing, man? How do you do it?
Well, it's easy, man. Once you get momentum, it's actually easier to keep going, right? So, I think your question's probably like, why don't you just pull over and enjoy it?
Yeah.
But that's no fun. I mean, that's no fun. I want to share this with other people. I want to see how big we can get. I want to see, these big companies, the Blackstones, the Goldmans, the New York Life, some of these companies I mentioned, they're no fun, bro. They're not really having fun. They're just printing money. They're just making money and more money and more money. Nobody's really ever done this at my level and let the everyday family get involved. And so the reason I'm doing this is, like, my mom was my best friend. She raised me. I was raised by a single mother. She would be proud of what I'm doing. Oh, yeah. If my mom would have had a shot at what I'm letting people in on, she wouldn't have worried every day of her life about money. Yeah.
Oh, I'm the same way, Uncle G. My mom and dad, contractor and massage therapist. My mom never made more than $14,000 a year. And to do I only own just 30 units. And that was kind of mind blowing to them. I can't imagine, 3,000, 5,000? Do you even keep track of those? Is it getting too high?
3,000 or 5,000 what?
Units. What do you got now? I know
we're at 12,000. We're at 12,500 units.
I love it.
Dude, it's a good thing. It's a good business. It's a good business for me. It's good for our investors. Yeah. It's good for our residents. The people that live here, we got people that live in this property will be investors that are putting in $1,000, their rent's $2,500. We had a guy that says, hey, I'm gonna pay $30,000 to live there this year. And he loves it because the average home in the neighborhood is 3 million. He lives in the same neighborhood. And he's like, I'm gonna invest 30,000 in your fund so I can be an investor in the property. And I'm gonna be a renter residence at 30, whatever that number is, 30,000. So he's like, I'm good, man. I have access to 30 restaurants, kayaking to the Atlantic Ocean, 3,000 square foot, high quality upscale gym, a great 99% occupied building on day one, cash flows to our investors. So he's going to invest $30,000 the first year. He'll get a paycheck. He'll get a paycheck from us every quarter because the property distributes cash flow, and he'll wait for the next 4 or 5 years until we sell or refinance the property and he gets his money back.
It's such, like you say, it opens up people who are in rural southern Lake Charles, Louisiana, rural Ohio, that are looking at these Midwest properties that are $30,000, $50,000, and you and I both know they don't appreciate. They're not catching up to the 20% growth that we've seen in the Miamis, in the Fort Lauderdales, in the Californias. So this is a great opportunity. And you said the minimum is $1,000?
$1,000. Most people are putting in way more than that. But the average, it's open for anybody that wants to do $1,000. You go to cardonecapital.com. I had 6 lawyers tell me not to do this. You don't need to do this. You just need to buy your deals. You let your wealthy friends invest with you and leave the little guy alone. And I said, guys, you know what? Because I'm doing this for the very reason you're saying not to do it.
I love it. I mean, and that's the thing you're doing it with the foundation too. You got TV shows. I mean, Uncle G, you're everywhere all the time,
Well,
I love it.
I got, I'm not going to I won't be able to be everywhere forever. So figure I'll be everywhere while I can, while I got the energy. I want to make a difference. You can't just sit around and complain about things.
Isn't that the truth?
And, if you want to be a force on this planet, you got to be everywhere. You got to have an impact. You got to stand for something. You can't just talk like, I can't just sit here and tell people, hey man, you need to invest your money. I need to give them a place to invest.
Absolutely.
So most people, as you know, never get started investing in real estate beyond the house they own.
Yep.
Because it's complicated. And most people don't have enough time in their life. They're work and they're at home.
Yep.
You're with your taking care of your family, and you're going to work every day to take care of your family. I created this vehicle so people could take care of their work, take care of their family, and let me take care of their money. Because Bank of America is not taking care of your money. Wells Fargo isn't taking care of your money.
No, fees eat you alive. They just keep you to death. There's no, like you say, you talk about all the time, the leverage benefits, the tax benefits. That's why you got out of California, we were talking about a long time ago, right? That 10% state income tax moved down to Florida. And we mentioned it a little bit before this call. You've got Californians moving to Texas and Florida. You've got the New Yorks moving to Texas and Florida. How much more has that? Have you seen that explode? This fund explode with that? All the growth and people moving there.
1,000, man. Like we got people moving. 20% of our tenant base is from the Northeast, new to Florida.
Wow. We
have more positive migration from the state of California into the state of Florida than the history of the state of Florida. We moved here 9 years ago. Mm-hmm. So this isn't new to me. I saw this happening 9 years ago. When they went from 10 to 13, by the way, the state of California is 13 and trying to get to 17. When you do that, when these blue states continue to do this insanity, mm-hmm. You're going to continue to push conservative people out of and earners. You're going to continue to push them into places like Texas, Tennessee, and Florida. Yep. They just happen to be coming down to Miami, man, because it's a cool place to live. And there's a lot going on down here. Tech companies are coming in for the first time. Institutions. This we're in the early stages, by the way. This is not a late stage move, Cameron. This is I think this is early in the game.
You think it's a generational shift, that this is just the beginning?
This is a 10 or 15 or 20-year run that we have in front of us. This asset I'm buying right here, we're paying over $200 million for it. I don't think I sell it till I sell it for $500 million.
Jeez Louise. I love it. And what is the typical exit strategy, Grant? So if, we're looking to let's say I want to buy into this, or just the average, person that's got a couple properties, but they're the Midwest style, they're the cheap $200,000, but they really want to take this to the next level and get some A-class stuff or AAA rated. What's that look like?
So there's 3 exits. Like, I don't like buying something where there's 1 exit. So there's 3 exits on this property. First, there's cash flow. This isn't one of the exits, but this does cash flow from day 1. Oh, so cool. Somebody invests with us before we close, you should get a check in January, and then every 3 months. If you're accredited, you get a check every month. The only difference between the accredited and the non-accredited, everything's the same except the distribution of cash flow. So it's just the smaller investor that's doing $1,000 or $5,000, the checks are smaller on the distribution. So we just elected to do those every quarter. That makes sense. 3 exits, in addition to the cash flow, the 3 exits, and we maxed out the cash flow. So if I can hit 6%, I'll hit it. If I can exceed that, I will. The 3 exits, the first exit is somebody comes along and buys the property. I could sell it right now for a profit, and I hadn't closed. So again, this is an irreplaceable location. I'm not exaggerating. Irreplaceable. You can't build it again. Nobody would be allowed to build that asset again. It is an 8-story mid-rise concrete block, AAA location, AAA build, AAA amenities. Okay, Fort Lauderdale, Maine and Maine. So we could sell it. We would sell it for a double. I'm putting about $69 million of my own money down. The first exit would be, I need my money back plus $70 million. Yep. Or I wouldn't consider selling it. I'd just wait for the cash flow. Yep. Second exit is the rents go from where they are right now, $2,500 to $3,000 a month. I know they will. It's just when they do. It's when they do. Inflation. At which point the property would be worth about $350 million. And we would take a new loan. This would be the second exit, more preferred than the first one. We would take a new loan at the new valuation of $350. We would borrow $310, $320 against, probably $310 against the property. We would send back the investors their $70 million plus have a distribution, no taxes on that event. And we would keep the asset as it cash flows. The third exit is I go from $4 billion to $10 billion and then $40 billion worth of assets. And we take this, our entire portfolio, and we go to Wall Street and figure out, with the help of one of these big Blackstone laboratories or Goldman Sachs chemical laboratories, and say, hey, we want to take our $40 billion of worth of assets and we want to turn them into $50 billion worth of bonds.
Interesting. And that's, I mean,
and then we party like it's 1999.
And the second strategy I think is probably more familiar, or at least the smaller investors are more familiar with it, because that's the burst strategy, right? I mean, you wait for the property to go up in value, you cash out, you get all that money tax-free, and you still own the asset.
Yeah, yeah.
I mean, that's a win-win-win. With, like you say, I mean, we know rents are going up. They haven't just caught up to home prices. And we know with them, the government printing all sorts of money, Uncle G, paper's becoming worth less and less. You got to buy some hard assets.
Exactly.
You've been saying it for 10 years. I've been listening to you for 10 years and saying it.
Bro, if if you tried to build that building today, it would cost almost a third more than what we paid for it.
Jeez.
So if a new builder is going into downtown Fort Lauderdale saying, I want to build this property out, I'm like, all right, where are you going to get the glass from, bro? Where are you going to get the wood floors from?
Yeah.
Where are you going to get concrete from? Where are you going to get the workers from? You can't even get people. You can't even get labor.
No, Port of LA is jammed. Labor is short. You got in at the right time. When did you start the construction on it?
We didn't build this. We bought this.
Bought it. When did
this is a 4-year project.
4-year.
That one of the best builders in the country put together, and their goal was to build and sell. That's how they make their money.
Yeah.
They will regret selling it. We've already had the cut. They're like, man, if we didn't have to sell this, we wouldn't. But that's how they make their money, right?
Oh my gosh, yeah. Well, what else? I mean, we've talked about the minimum investment. What is the concerns, Uncle G, with somebody putting it in a non-accredited fund? You know, I'm not real familiar with the non-accredited stuff. I've heard about the accredited, but that's something space up. You know, a lot of my listeners don't play, but the non-accredited, I think, is something that a lot of people don't talk about anymore. I haven't seen this out and about much, let alone in South Florida in an asset that you got.
Yeah. So the downside for the investor, because they're not thinking about the downside for me, but the downside for the investor is, like any real estate investment, your investment is not illiquid.
Mm-hmm.
So a lot of people see that as a negative. I personally don't, because I know the way to create wealth is to have cash illiquid, meaning I don't want cash sitting around. I know all wealthy families know this, by the way.
Absolutely.
You know, people are like, oh, I keep some cash around, you know, in case there's some opportunity. Truth is, most people get rich because they get heavily invested in a handful of things. Warren Buffett is in 4 major. His entire portfolio, while it might look like he's in 50 companies, the majority, 80% of his holdings are in 4 stocks. Elon Musk, everything he has, 3 stocks. Steve Jobs, he owned 2 stocks when he died. So the truth is, you know, the American family is like, oh, I'm in 50 different investments. That's ridiculous. Mark Cuban even said diversification is for dummies.
Yeah, I agree.
So we want to buy the bigger assets, and I want to be illiquid. So the downside is you're not liquid. You can't just get your money back tomorrow. Another downside could be, oh my God, are we at the end of the cycle? Like real estate's expensive right now? Maybe.
They've been saying that since 2013, though.
They've been saying that since 1920.
Yeah.
Like if you look at the last 5 decades, 50 years, if you look at rents in this country, what most people don't understand about housing is that is a different kind of housing than your house. You know, a house in a neighborhood is based on the value of the neighborhood. This is based on the value of the rents.
Yep.
And the way apartments today are not apartments of the 1990s. This is a different level of living, bro. This is like living in a hotel, not living in a house. And so 1, you're illiquid. 2, you know, the cash flow is going to be 4 to 6% a year.
Mm-hmm.
I mean, you know, I don't know, is that good or bad? The bank pays you 0.18 of 1%. It takes 8 years to get 1% out of the bank. So the people that complain about a 4, 5, or a 6% return on their money, they're just probably not with the, you know, maybe don't have an awareness of what the bank's paying you, because the bank pays you nothing now.
Well, and like you say, your money's getting cheaper and cheaper with inflation. It was 5% last year. You know, it's getting cheaper.
So hurricanes can be a negative here. We're covered against hurricanes. Flood damage, covered. Tornadoes, covered. Fire damage, covered. Earthquakes, they don't happen here.
Yeah.
Let's say there's another COVID. Let's say COVID happens for another 3 years, and there's a Delta variant, a Mu variant, and a boo-boo, you know. Okay, well, you know what? During COVID, we had a 95% occupancy and 98.5% collections. People don't get rid of where they spent more time in their apartments.
Yep.
That can drive the expenses of the property up a little bit. Now, the negatives to me of getting a non-accredited, the cost to do that, as you may or may not know, is $300,000 to start the fund. That's what I had to spend, and it took me 9 months to get it approved. And the SEC looked into every single banking account that I have. My personal, my businesses, all my businesses, and this property. So the expense to get a little guy, the everyday investor involved, is prohibitive for most people to do this. I did it because I think it's the right thing to do. And I'm trying to change the game on how the everyday investor, the opportunity they get to invest in a super high quality of real estate.
And Grant, it's just amazing because like I mentioned before, you're doing so many things. You don't have to do anything. I mean, you don't have to put in $300,000 and spend 9 months of your time messing around with something to just give everybody the opportunity to do this. And probably most people with your level don't, right? I mean, it's an opportunity, I think, for the majority of people that listen to me and follow from, small Midwest or Houston market, they're not getting this kind of opportunity, and they don't see, I think, like you mentioned, all the benefits, with the downsides being very negligible. I mean, like you say, oh, you're illiquid. Most people are out spending their money at the bars anyways. That's probably good for them not to have cash sitting in the bank. Inflation's taking over,
1,000%. We got people saying, hey, I'm going to give this to my mom for a Christmas gift. I'm going to give it to my son to get him started. I'm going to, most people are calling saying, hey, can I put in 5,000, 50,000, 80,000? Can I put in my retirement account, my Keo? I want to get out of the stock market. So we had 13,000 registered investors in the first 5 days.
Wow.
We had $42 million in commitments in the first 7 days. And I'm telling you guys, nobody has ever done this at this level before. This is truly a game changer. I got wealthy people call me, hey man, I got 5 million. I want to put in that deal. Like people they said, I've never seen a quality asset. I said, because you guys need to understand, everybody watch it, non-accredited, accredited. Rich people don't get access to those deals. The only people that get to buy that's 6 blocks. That's a 6 blocks, covers 6 blocks, $200 million transaction. It's it's a 1/5 of $1 billion. Wealthy families do not get access. Okay. $1 billion net worth families do not get access. It skips over and goes straight to insurance companies, and insurance companies, they fund these products because this is how they pay their insurance off. They need something extremely dependable,
safe,
something real that can pay their insurance distributions in the case of death or accident, right?
Yep.
So a lot of people just don't understand how the game works. I'm doing this. You said I don't need to do this, but the truth is I do need to do it. It's kind of my mission to disrupt this space at a time where everything is being disrupted. Automotive is being disrupted. Telephone, social media, banking is going to be disrupted. Currencies are being disrupted right now. Absolutely. And investing is also going to be a disruptor.
Grant, I think I'd speak for every small investor who's got just a few properties that this is a hell of an opportunity. We appreciate you doing something like this. Is this, this South Florida property, is this one of just many that you're going to be doing here in the future? Are you going to look to other markets in Texas, the Tennessee that we were talking about?
We just closed a $189 million deal in the Heights in Houston.
Woo.
I closed a $70 million deal in Boca before that. We did a $140 million deal up in Virginia. We're looking at 3 properties in the Carolinas right now. We're looking at more stuff in Florida.
And those are all for non-accredited?
We don't have a fund open. The only fund we have open right now is this deal right here.
This one for the non-accredited. Okay.
Yeah. So we don't want to confuse people with too much.
Absolutely. The first one. Well, Grant, what else? I mean, we've covered the downside. We covered the upsides. Everybody knows who listens to this stuff that real estate's a hard asset. We want to get out of cash. It's a very minimal investment. People are gifting it, like Grant said. A hell of a market, an opportunity that everybody's moving to, the Floridas, the Texases of the world. I mean, what else can be said about this, Grant? I think we've covered everything.
I think the other question people would ask is, well, why don't I just invest in my own deals? Maybe you have 200 grand and you're like, I'm going to go find a deal in my own market. 200 grand. If you have $200,000, the truth is you can't buy anything big enough to matter. Mm-hmm. I have people with millions that could go, I got a guy put $2 million in this deal. He could go, he lives in Arizona. He could buy an $8 million asset. 8 million will buy him approximately, let me see, 8 divided by 250 is what he's going to pay a unit. What is that? Divided by 250. He's going to buy 32 units. Is that right? Times 250.
I'm trying to do the math here.
He's going to buy 32 units. I got 32 vacancies there. You need scale. You need scale. You need got to have scale. If you don't have scale, this is a 456 unit building. Okay. I will make more money filling up my vacancy than he can make on the whole property.
And
Just
Grant,
by me filling up my vacancy.
And that's so important. You know, people talk about, like we were just talking about those Midwest deals. Who gives a shit if you got a 20% increase on a $30,000 property?
That's a good point, because I picked one of the hottest other markets in the country.
Yeah.
I go to St. Louis, Cleveland, anywhere in the Michigan market, New Jersey, New York. You cannot do this there. Kansas City. You guys cannot buy these assets. These assets are going to explode because I have positive migration coming in to Florida that you don't have in St. Louis. You don't have it in Louisiana. You may have it in Houston. You definitely have it in Austin. You have it in Nashville, but not even in those places do you have it at the rate we have it here.
Yeah. Well, it's like, I think that is a big thing too, Grant, it's just the small investors not thinking about the 20% return on a $30,000, $40,000, $50,000 property doesn't move the needle for the average Joe or Jane, you know, and let alone the tax benefits too. Your write-offs are going to be huge.
Well, and you're doing all the work. Okay.
Well, we didn't even get into that.
How much work? This deal is 200 million. How much work can you do? You can't do anything.
No.
You know, you guys want to come live down here? You can. I mean, it's going to be more work to live in the property because you'll have to go kayaking on the weekends. That'll be your big. We have people. The rent's $2,500. The investment's $1,000. You can literally invest for half of what it costs somebody to live here.
That's amazing.
Okay, so irreplaceable asset. It's like there's a no-brainer for somebody that's got 10 grand, 20 grand. You're investing in a $200 million asset with $20,000. You're a partner in the deal.
Grant, and how much time, like you said, the guy with $200,000, how much time is he going to spend wholesaling, door knocking? You know how tight the inventory and everything is. How much time are they going to spend? How long is it going to take to them to deploy that money?
A lot of those people are going to lose money in their deals.
That's 100% right. They don't know what they're doing.
When the market corrects, you guys, like in 2008, 9 and 10, who got killed? Duplexes, fourplexes, eightplexes, and single family homes.
Yep.
This stuff never went back. This stuff never goes back to the bank, guys. Okay. If I was in trouble today, I'd have 10 people trying to buy this thing from me this weekend.
Yeah.
I could have sovereign funds. Abu Dhabi would be like, we'll buy it. Like this is UBS, Blackstone, the Goldmans, the JP Morgans. They'll be like, we'll buy the deal. Because what are they going to do? You think Blackstone's going to go buy a duplex in suburbs of St. Louis?
No.
If they could buy 400 of them, they would.
Absolutely.
But they're not going to bail one guy out of trouble. So there's, like you're saying, there's so many ways to make money in quality. This is real living monopoly right here.
Yeah. I love it. Grant, I mean, it's just, you're so right. And to skip past the learning curve for the average person to go right to the cream of the crop. I mean, you can't do that. You deploy $20,000, $30,000, $40,000 into an asset. You screw up because you don't check that the tenant left the water running, burst a bunch of pipes in your house, just like we had happen in Houston 6 months ago.
Yep.
You got on-site management, right? They don't have to deal with anything.
Yeah, we had, speaking of the freeze, we have a property in Austin. It's about the same size as this, actually. It's identical, 456 units. We had 32 units that had frozen pipes, plumbing problems. We had to vacate. I had the cost of vacating the tenants. Mm-hmm. I lost income for 4 months to fix it. Had to sit and wait on insurance. That would kill somebody that's not funded.
Oh, absolutely. I had 11. Me personally, I had 11, and thank gosh I had another 20 to support it, or otherwise it would have been SOL. Right. I mean, yeah, the average person with one or two can't float it, Grant. They can't float it.
Yeah.
Let alone the expertise to fix it.
Yeah, and then you got what happened when COVID happened? I know a lot of guys with C properties during COVID, they couldn't get paid.
No, and the government,
They had to wait. They had to wait and they had to sweat. And what about all the damn emotional freakouts?
Oh gosh, yeah. Well, Grant,
Hey man,
I mean,
I appreciate you telling people about this, and I hope you guys take advantage of it, and I hope you and your family take advantage of it as well, Cameron. And we have a lot of professional investors that are actually invested in this deal. We have accredited. It's open for accredited at $100,000. It's open for non-accredited at $1,000. This is a great opportunity, folks. If you don't know who I am, I've been buying real estate for 30 years. I've never ever lost money in a deal. And this is as good an asset as we've ever bought in my life. I don't lose. I'm a winner.
Yep.
So I hope your audience takes advantage of this deal while it's open.
Oh, Grant, I guarantee. Do you have a website, or where should we point people?
Yeah, go to cardonecapital.com, cardonecapital.com. If you just go in there, register, you can start with $1,000, $5,000, $10,000, $20,000, whatever you want to do. And I think we close out the entire fund at cardonecapital.com by probably the end of this month.
Okay, guys. Well, you heard that. What, you were going to say something else, Uncle G?
No. And if you have questions, I got 40 employees here that answer questions. So happy to answer anybody's questions if you need to call in. The phone numbers at the website.
Perfect. Well, you guys heard that from Uncle G from the horse's mouth. It's early November now. You guys got till the end of the month to take advantage of an opportunity that not many people get. Again, I have not heard of non-accredited funds with this type of asset. Go to Cardone Capital. You get to take advantage and invest right alongside of Mr. Grant Cardone, who, like he said, has been investing for years. I would be floored if most of you guys don't know who Grant is. I mean, I think everybody with Instagram.
More people don't know me than do know me, just so
absolutely. You know. I love it. Well, you guys, I appreciate everybody tuning in. Check out Cardone Capital. Get an opportunity to invest with Mr. Grant Cardone. I'll see y'all next week.
Appreciate you, brother. Thanks,
man. Grant.
Thank you.